Hi everyone, welcome to CANDO T.V. This is the first of a few series where we're going to show you through our virtual workshops how to improve your life. We're talking about a new year and 2020 is going to be great, especially if you follow some of the steps from the experts that we're going to feature this year. In this installment, Michelle James of Tax Pro of Tampa is going to tell us some information that's going to help us out, not for this tax year, but for the next tax year. There are some really important changes that are going to affect for 2020 that you need to really take heed of. So let's take a look.
Wanted to discuss with you today the changes on the W-4 for tax year 2020. So the IRS has tried to make this form a little bit simpler for us by allowing us to just fill out our names and address and then maybe putting a signature on the end, and they will calculate what your withholding exemptions are. Now the changes apply to those who are employed and have to get a paycheck. Okay, so that's what the W-4 is. What it does is it calculates your tax allowance. So whether you have dependents or not, that's what this form will calculate for you. In box number 2, they've also provided an estimator now online. Now the estimator can be a little bit tedious because I've kind of, went through it myself, but you're more than welcome to try using the estimator to see just how easily or how much taxes what you should be putting on your W-4 for your employer. The importance of this is so that you ensure you're not really owing, but you aren't really getting back an excessive refund. Right? So throughout the year is what they would call the advanced earned income credit. So what they're trying to do is they're trying to have people take that money up front instead of getting these huge refunds at the end of the year. In box 2, it also asks if you have multiple jobs to let them know that, because then they'll let you calculate based on the highest paying job. In part 3, they kind of talk about what are some of the dependents, how many dependents you have, and kind of give you an allowance for that. And in 4 is, are you receiving any other types of income? And if so, that might be any kind of self-employment income that you're getting, any extra work that you might have on the side, 1099 income, pensions, anything that's not coming in that is taxed, giving you an opportunity to also pay additional taxes through payroll to kind of cushion yourself at the end of the year. So it is going to be important that everyone fill out that new W-4 for tax year 2020 to ensure that with the new tax law acts, jobs that have been put in place, you are now at least in line with the IRS and you aren't owing. So last year, I think it caught quite a bit of people. The tax laws caught quite a bit of people off guard, and a lot of people just kind of ended up owing. So hence the changes on the 2020 this year is what came about. So for our self-employed people out there like myself, for those who are 1099 employees, consultants, what's important for you at the end of the year is that you start maybe looking into contributing to a retirement account. So while there are certain limits and incomes that will apply, it is always a good way to minimize taxes by contributing to an IRA. And you will see a significant decrease in actually your tax liability. So that's always a good way to minimize tax liability. Another thing that we could also do is begin making estimated tax payments. So instead of waiting until we file to get hit with that big tax bill, let's start preparing by speaking with your accountant prior to. Let's check how your income is proceeding, check and see how your expenses are, and let's begin making estimated payments to the IRS. This will also avoid any kind of penalties for not making those estimated payments. Organize your records for tax time. Don't walk into your accountant's office during tax time with a shoebox. You will be the last to be addressed. Because remember, for us, this is a let's get it done. Everybody needs their tax returns done at this point. So trying to gather your information together right now just kind of slows down the process as we are running with a time frame. So try to organize your records. Try keeping an Excel sheet. Try using a mileage app if you have to maintain your mileage. Try using TurboTax. So there are several different softwares that you are able to use, even Quicken. For self-employed, you can use those programs to kind of help you to gather those expenses throughout the year. If you're self-employed, I always think it's important that you kind of add or try to use just one credit card just for the business. That way you just kind of go back to that one credit card and you're not looking at, all 5, 6 cards trying to figure out what's business. The other thing you can do is ensure that when you speak with your accountant, you provide them what they need so they are filing the right tax forms. That's also an issue that I have seen. We get letters about mid-year saying that you have filed the wrong tax form. So if you're an 1120 and we file an 1120S, it's incorrect and we still have to start over from scratch because the IRS actually deletes that tax return. All right. For 2020, the IRS has also given us a little bit more leeway on the home office deductions. Because they've taken away a lot of the personal deductions from us, they've given us a little bit more leeway on the home office deduction. It was always an area where it was highly audited because it was so, people kind of abused the fact that they could use their home as a write-off. Use it with discretion. The area that you use is supposed to be for 100% business. And as long as you are calculating that based on the total square footage of the home, based on the square footage that you use, then you should be fine. So it's also a great way to kind of minimize some of those taxes that you'll have. And just, be mindful that you get your accountant the information that's needed to file the tax return. And let's get those returns out on time so we can avoid a lot of those late penalties. All right, so just wanted to share some tidbits about the 2020 new tax laws and the changes that you will see on the tax return this year. For one, you will see that they have gotten away from charging the penalty for those who are unable or who have been unable to afford health insurance. So no longer will you have a penalty for the individual insurance mandate. So they have removed that. We no longer have to have insurance to file, but if you do, you just have to ensure that you get your 1095A from healthcare.gov before sending in, getting your tax return prepared. Some of the other things that have changes that you will see is the standard deductions have increased a bit this year. Married filing joint has went up about $400. So that's now a total of $24,400. What that means is the first $24,400 of your income is not taxed. So that becomes a nice break. But that was given because they had gotten rid of the personal exemptions and also a lot of the Schedule A write-offs, which were medical. Now, medical has now increased to 10% of the adjusted gross income. So if you made $100,000, your medical expense would need to be more than $10,000, okay, for you to even begin to get a deduction on the medical insurance. But again, that $24,400, if you are married filing jointly, all that would be tax exempt from your total income in the household. So that becomes a nice break. Married filing separately would be exactly half of that. Now, the nice thing about that, married filing separately usually has some really adverse effects. We're kind of finding that the effects are not as bad anymore. They have sometimes disallowed you from getting certain credits because you have used that tax filing bracket, which is married filing separate. So again, if it's not for a particular reason, let's say one spouse has tax that the other doesn't, or some student loans, or just some things that you don't want to combine that income, then you might want to look at the married filing separate, but you do lose some of the advantages of doing so. Head of household is now $18,350, so that's up another $350 this year. So I think what people will see is that they're getting more of their money back through the tax returns now as they're filing, because the exemptions have now increased. The other thing that we need to also pay attention to is I know last year they'd gotten rid of it, but they've all those new tax laws still remain intact. So the medical insurance changed to 10% because that was 7.5 last year. It has changed to 10%. But what they have kept are things like the PMI insurance. We're still no longer personal mortgage insurance. We're still no longer able to deduct those. And again, we still have that $10,000 limit for those states that actually have state taxes. Fortunate for us here in Florida, we don't have to really deal with that. If you drive for Uber, if you drive for Lyft, ensure that you're getting those 1099-Ks from them to make sure that you're filing. Less a chance of an audit if you ensure that you're at least receiving those tax documents. So you just want to be mindful for that. Any large vehicles that you've purchased, they still allow you to deduct sales tax. So any large purchases, that engagement ring, that new car, maybe new appliances for the home. So those large purchases that you make sales tax is still deductible. So take advantage of that. Okay, so that's always a big thing that a lot of people miss is the sales tax. All right, we tend to overlook that. What are some of the other things? The casualty and losses, we were able to do that. So let's say a hurricane came through and kind of, made some damages. We aren't really able to do the casualty and losses anymore. That's more for, they allow those for, in different circumstances, if it's been declared a national event, then they will go ahead and allow you to do that. So again, my name is Michelle James, Tax Pro of Tampa. My address is 3420 South Dale Mabry Highway, Tampa, Florida, 33629, and I also have an office located at 1304 East Bush Boulevard. Feel free to give us a call, 813-831-6100, and our website is www.taxprooftampa.com. So that's TAXPROOFTAMPA.com. Thank you.
Thank you so much for watching. There you have it, some great tax tips just for you. So stay tuned and look out for the next episode.